right, now let's take a look at the bigger picture with Gerald Sparrow, CIO of the Sparrow Growth Fund. Gerald, thanks so much for joining the show.
Thanks, Carol, for having me.
So taking a look, stocks, the major averages continue to be in the green right now, modest gains, but it seems like the bulls are back in control once again today, and it sounds like you're one of them. You're pretty upbeat on this market. Tell us why.
Well, we're upbeat on the market because we're getting a lot of positive inflation prints, and with the potential tax cuts, another catalyst for year-end market rallies. Also, the Federal Reserve has been on hold, and they're more likely to lower rates than increase rates. So with a very tame backdrop of inflation, some catalysts from the Trump administration, we're very bullish at least from now till year end.
Okay, so we have an S&P that's 22% off the low, so it's seen a pretty impressive recovery, only up about 0.5% year to date, but that's a huge improvement compared to, say last month. So tell us, how much more room does this market have to run?
Well, it could potentially rise another 10% between now and year end. It's up a few percentage points for the year to date, so the average gain on the market's 10%, so we could see another 10% from here to year end.
What would you say the biggest risk to this market is? Because it sounds like on the positive catalyst side, you have the tax cuts that you mentioned. We have the fact that inflation isn't as hot as expected. But there's also the uncertainty around tariffs, and there's the fact that the Fed could potentially have to cut rates because the economy is weak. Then what?
Correct. Yeah. Well, I don't view the lower interest rates from the Fed to be a problem. What I do think would upset some of the bulls would be the reverse of the tariff gains that we've made. So the tariffs were higher, now they're lower, they're on hold. So there's a lot of uncertainty with the tariff news and what Trump's going to do, but that could be a pushback in the market between now and year end.
Gerald, if tariffs stay at that 10% baseline that they're currently at, do you think this is a market that can still rally 10% into year end?
Yes, I think consumers are strong, employment's strong, unemployment's low. I think there's a lot of spending. People want to do things that I think they're still recovering from COVID. They just don't care. They want to get out. They want to do things. They want to travel. And that's a positive for consumer spending and business investment between now and year end.
Okay, so it makes sense why one of your stock picks that you brought us is Booking Holdings. BKNG, shares up about 1% today, shares up 6% year to date. So this is not just a bullish call on Booking, but also on the consumer.
Correct. Yeah, we think as populations grow, Booking is the largest online web-based travel agency, if you will, and they're $169 billion market cap, very seasoned management. They're buying their stock back in, so they're reducing their float. They have a tremendous free cash flow, and they roll out new products. They have Kayak and Open Table, things like that. So we're very bullish on Booking. Yes.
You're also bullish on Okta, which has had a pretty impressive run year to date. It's up almost 60% in 2025. It's very close to the 52-week highs. I'm curious if you'd be comfortable buying Okta here at, call it $125 a share, though.
I think that between now and next quarter's release, you may get a decent opportunity. You won't have to buy it at the high. But their last quarter was very outstanding. And it's a web-based service, it's software as a service, so you're not, they're gaining market share, they're the leader, there's very smart people running that business. And if you want to hedge against Doge, if they're going to be digitizing the federal government, this is a particular player in security and authentication that will benefit from the digitization of the government.
Okay. You also like Docusign, which is well off those COVID lows from COVID highs, I should say, from a few years ago. But it's actually had a pretty good 1 year chart, up about 50% over the past 1 year. Tell us why you like Docusign.
I like Docusign for the same reason. It's a web-based business. a lot of mid-sized enterprises have, in the last quarter's call, they talked about 4,000 contracts. So they're able to digitize those contracts, administer the contracts, make the business more efficient, collect money quicker. And so it's an efficiency play on the digitization of contracts within organizations.
Gerald, there's some clear names that you like here, but I'm curious, as you think about market leadership more sector-wise between now and year end, if we're going to see a 10% rally, what is it that leads us higher? Is big tech, which had really been struggling up until May, essentially, going to be what does it?
Big tech will be certainly part of it. I think communication services, companies like Netflix, Meta, and in the consumer cyclical space, Walmart continues to do well, along with Amazon. So I think the internet-related software, hardware, and communication services like Netflix, and also some of the consumer stocks.
Okay. Gerald Sparrow, CIO of the Sparrow Growth Fund. We appreciate your insights and your picks. Thanks so much.